Okay, everybody, it's me, Gregory Mannarino, and I am thrilled to be with you today. I really mean this. It is Monday, March 6th, 2023, and in case no one told you yet, you're all freaking beautiful. In a good mood, as you can possibly tell, or probably tell. All right, look, here's the situation. And it's kind of funny in a way, I suppose, here. So we've been watching a very interesting phenomenon occur over the last several weeks since the MMRI crossed 250, global bonds selling off, yields rising, the S&P 500 having 3 positive days in the last 10 trading days. Well, overnight, this started overnight, and it seems to be playing out right now as well. Global bond yields are dropping. Now, how does this happen? How is it that we can have several weeks of global bonds selling off, then all of a sudden by some freak chance, some entities out here just decided to go ahead and buy more debt? This is central banks. What did we find out just recently? And I want you to look this up for yourself. Open up a new search engine and just look this up. Central banks collectively have pumped $1 trillion into the market, not into the economy, into the market since the first of this year. $1 trillion. And that has obviously kept stocks detached from reality, and who knows what else is up their sleeve. But I can tell you right now, this phenomenon that we're watching right now, global bond yields dropping, that means that central banks are buying more debt. So what do we have here? We have $1 trillion being pumped into the market by central banks. We have this phenomenon right now, at least started last night, playing out this morning, of a lot of debt buying. It's only one entity and one only collectively, okay? It's the central banks of the world. Now, this is the game that they're playing. They float out Fed President Mary Daly. Mary Daly wants you to know this, and I want to get this exactly right. So this is what she had to say with regard to monetary policy. We have a bunch of things going on this week. So Mary Daly wants you to know that the Federal Reserve is going to maintain a tighter monetary policy for longer. Really? Meanwhile, let's see. Central banks pumping $1 trillion into the market. Some mysterious, yet to be defined entities are now buying the debt. More debt. But she's telling you they're going to maintain tighter monetary policy. That's what they do. They talk out of both sides of their mouth. I really believe what I'm going to tell you. Never before in the history of the world have we witnessed an institution, and I'm talking about central banks. As you can tell, I don't like central banks very much, who are so hell-bent on lying to the people of the world, at the same time doing one thing while saying a totally opposite thing. What are they doing? As they push the global economy off of the financial cliff here, meanwhile making sure they keep the stock market propped up to foster the illusion that everything is just fine and lovely. Meanwhile, again, the bad economic news does not stop. Every week, the economic news is worse than the previous few weeks, and then it's distorted and it's twisted into some other kind of thing. Look here, don't look over there. You know the story. This happens over and over again. Now with that, we're going to get a whole bunch of economic news this week as the market holds its breath here. But again, look, it's pretty obvious to me, at least for now, that central banks are going to continue to support this market by pumping untold amounts of cash into it as they buy the debt. Central banks, people, I'm going to tell you again. I'm going to tell you right now again, in case you're new here and you don't know. Central banks are not only buying the debt, they're buying the stock market. They're buying large cap stocks to keep the market propped up. They tell you, at least the Federal Reserve will tell you, that they don't do this. So when you hear, again, the Federal Reserve tell you they don't do something, you know that's exactly what they are doing. For example, we had Powell several months ago explain to us all that central banks do not coordinate. He said specifically, central banks talk all the time, but they do not coordinate their actions. And you and I discussed right here, well, that's kind of interesting. So they don't coordinate. Meanwhile, they're doing the exact same things at the exact same time. How does that work? Well, we found out the truth out of his mouth just at the last FOMC meeting where he said, oh, yes, central banks do in fact coordinate. We don't need that freak to tell us what we already know. You understand? I think you get this. Anyway, so that's the story. A pretty big turnaround here with regard to the global debt market. Central banks are buying the debt again in mass. Okay, we'll see how this plays out. So we have two phenomenons occurring at the same time. Central banks pumping cash into the equity markets, buying the stock market, and they're buying the debt. Again, no surprise to, I don't think, a single person that follows this blog. And I've explained to you, we've discussed right here on this blog over and over and over that without direct intervention from central banks, this whole thing is going to end. Well, I believe we just got some of that. Let's see how it plays out. Look, it's pretty obvious to me, and it should be obvious to you, that this instability issue in the debt market, it had to be corrected. Again, otherwise, that's it. It just ends. So it's very possible that right now we've just seen the opening salvos of that. The MMRI has dropped from over 260, like things were getting really out of hand here, to now 253 as of this morning. 253. We are just 3 points above the first red line in the sand, which we crossed several weeks ago. Market sold off. 3 positive days for the S&P 500 in the last 10. They're not going to allow this. So they're going to buy the debt as they're doing right now. I believe it's a strong possibility we could see the MMRI drop below 250, maybe even today. Now, with that said, we got, again, bond yields dropping, 10-year yield lower, relative strength of the dollar weaker, gold and silver slightly higher this morning. You got cryptocurrencies, I would say flat to under a tiny bit of pressure. Crude oil under pressure this morning. These gyrations that we've been seeing lately, especially with natural gas, has been just beyond freaking belief. This is eventually going to play out, in my opinion, to eventually, I really believe this, much higher energy prices, much higher energy prices again. Why? Let's think about it, okay? Because these assets are priced in dollars, right? U.S. dollars, and the U.S. dollar is losing its purchasing power at an astonishing pace, and that's the real root cause reason why we are seeing inflation surge out of control. No end in sight. No end in sight. Despite what we heard from Mary Daly today, tighter monetary policy is needed. Tighter monetary policy is needed for longer. Really, because they honestly want to fight inflation. How about no? Again, when you hear that, when you hear a central banker tell you, oh, we're fighting it, we're in the battle of our lives to fight inflation, you know the polar opposite is going on. I don't need to tell you this. I think you're well aware of that if you follow this blog. Whenever they say something, believe me, they want you to look in one direction. That means you and I need to look in the completely opposite direction. You understand? Anyway, so as I said, we're going to hear, tomorrow we're going to hear from the Supreme It himself. It's going to talk. Powell, the thing, Yellowstone, is going to talk tomorrow. And it's going to be kind of interesting to hear what comes out of its mouth. Actually, it's not, because this is how it's going to play it. I'm going to tell you right now. He's going to be appearing before a Senate committee. And the senators are going to lick the crud out between his toes before. Thank you, sir. Thank you for your service. Thank you for your service, sir. They're gonna literally, that's what they do. They thank him for his service because it's so extraordinary. He's doing such a great job with the financial system. Who's responsible for the financial system? Who's responsible for the markets? Who's responsible for the economy? It's not our imbecile senators and whoever the representatives that are supposed to represent us, which we have none. It's him. It's it. It's the thing. It's the Federal freaking Reserve. And they control everything, people, including the flow of information, okay? You're allowed to know what they want you to know. That's all. And I think you're well aware of that. So that's where we stand. This morning we got a market here that appears to be, at least right now, trading doesn't start for about 36 minutes from the 36 minutes from the time I am doing this video blog. And stock futures are higher on the back of debt buying, okay? Central banks, they're out here, they're buying the debt. And you can see this in real time by watching global bond yields, by watching the MMRI, which is, again, 253. Have a look at this for yourself and laugh. Laugh. Link in the description of this video. Click on that, takes you right to the MMRI, free to everybody on this planet Earth. And you and I can just laugh. Anyway, that's it, people. That's where we stand. This guy here loves you a lot. I mean that from the heart, heart, heart. Please share the video. Get it out there. I can always appreciate a thumbs up. And you will see me at the end of the day for my live stream. And I am looking forward to that. All right. I know a lot of you really like that live stream. Some of you hate it. Why? I still don't know why. I don't get it. Whether I do it live or I record these things, I don't really see a difference. But I'm trying to make everybody happy. Henceforth, why I do these pre-recorded in the morning and I do the live stream later on. All right. I will see you later. Okay.